So we have Fook Hien Yap, Senior Investment Strategist at Standard Chartered Bank, now joining us to take some questions. Fook, good to have you with us here. Thank you for your time. Appreciate it. So I just want to start with the effect on oil. Trump is asking OPEC to increase supply. And that is meaningful for large importers like India. If the price drops, I mean, it's been north of 80, and now we're at about 78. I mean, if this were to turn into a bit of a reality, it's very meaningful from a macro point of view for countries like India. Just your thoughts, you think it's going to come to pass?
Yeah, I mean, we know that the Scott Bessent, which is on the Trump's advisory team, I mean, his point, one of his three arrows was to have lower oil, and then that would actually help with inflation coming down, and that would be supportive for the U.S. Now, I mean, he wants to lower oil by increasing production, and that is a bit of tricky things because producers will want to see higher oil prices in order to increase production. So they actually plan to increase production he's made the comments to other partners, other producers around the world for them to increase oil production. We'll see whether that comes true or not. But within the US, they also want to increase production by lowering the cost, making it easier for the drilling rights to go through in the land. So it depends whether you can actually achieve it, because at the end of the day, we think that producers want to see higher oil prices in order to produce more oil. But by lowering the cost, we think possibly it's something they can do on the margin. So it is definitely part of the strategy of what he wants to do. I think the execution part is a bit trickier that we need to see. But clearly, if he manages to bring down oil prices, brings down inflation, and that actually smooths out a lot of things, because the market has been very worried about Trump's policies and its impact on inflation.
Yeah, absolutely. Fook got that point. I want to get your sense on how you're sizing up a lot of the Asian countries and Asian markets that are, trying to prep for a tariff war if it were to happen. Look at what Singapore has done this morning. And they're using currencies, right? China's been letting the yuan depreciate. This morning, we've seen the moves out of the Monetary Authority of Singapore. And I wonder, today's Bank of Japan. Now, will the Bank of Japan be able to hike interest rates hours after the US president says the world should have lower interest rates? Your thoughts?
No, thanks for that. I think, there's a lot of uncertainty in terms of this America First policy and how that impacts the rest of the world. We think that, the tariffs that he's been coming out with, in fact, in his first week at the office, it's probably come out a bit less bad than people expected, especially on the Asia front and on China, the comments that he has made, compared to 60%, which was promised during the election campaign. It's come out a bit softer than expected. Of course, we remains to see, because it can change very quickly. But that is something that we'll need to watch. And we do believe China actually has the ability to respond in terms of the policy stimulus, but it's waiting to see what Trump unveils first, and then whether they can come to some kind of negotiation before they will do that. Now, in terms of the, I think that in terms of what Japan is going to do, I think pretty much the market is already expecting that they will be hiking. It's just the guidance after that. The expectation is that they will hike and then be cautious and watch the data after that. So as long as they stick to that, I think the market is happy with that, because that is what has been guided to expect, in line with expectations, really. But for Asian countries, I think very much seeing how Trump wants to roll out his policies, and then they will try to respond.
All right. Hi, Fook. Good morning. Good to see you in. One risk is with regard to Trump is he doesn't go as harsh out at China in comparison to what global markets were expecting. And that could be a bit of a negative for the Indian markets, because, we were expected to be a bit of a beneficiary. And, hopefully we were, that Trump will be better to India in comparison to other emerging markets. That said, our markets have gone through a period of consolidation and a price-wise correction as well. What's your view in the Indian markets? On one hand, we have an economy that's slowing down a little bit in comparison to what we've seen in the past. The other part is that this is not a structural problem. So longer term, India could still look up. Your view on India, is it a buying opportunity?
Yeah, India is our favorite market in Asia. We think it is a buying opportunity. So that's a straight answer there. It's still delivering 14-15% growth this year and next year, 2025, 2026. So we think it is leading in terms of the structural growth that it can offer. Look, it has come off the correction. We think it is an opportunity to buy on dips. Now, the catalyst of what could change that, could reverse that. I mean, there's a few, but I think the main one will be looking at the earnings estimates, whether they can stabilize, because we've seen the 2025 earnings estimates at consensus actually coming down. We need to see that stabilize before the market gets more comfortable with it. There's things like the dollar, US dollar, which has been very strong. If that comes off, that could help as well. The oil price you mentioned already, that is something that's positive. But really, I think we need to see earnings estimates stabilizing for 2025 before the market can actually bounce on the back of that.
Okay, all right. Fook, we'll leave it there. Thank you very much for joining us and running us through all of that. Appreciate it here on CNBC TV 18. Well, time for a